Hello, welcome everybody to the 14th edition of LM's Weekly Wrap, our weekly program to cover all the events which are impacting the domestic market, the international markets, the various corporate events, the results, analysis, and encompassing all the market developments. With me today is Senior Equity Research Analyst at LM, Jash. He will be covering the international developments in the markets, which will be followed by a sectoral analysis from my side. So, Jash, it's been an eventful week.
Yes.
Yeah.
Thank you, sir, and let me wish everyone a very happy new year. And so let's begin with the markets this week. We had a long weekend. We had Monday and Wednesday was off. We had Murat trading on Monday, which was unexpectedly very nice. And we have seen the markets being in good traction, and it has been moving up. We look at Nifty. Nifty is at 17,750. Last week and the week before that, we were staring at Nifty going below 17,000 and 16,800. We were very skeptical about the market. We were not sure on where the market was heading, but this week has proved to be very eventful. I'll be starting with global markets and then coming back to the domestic markets. So the global markets, it has been very eventful. Major results were out. We had Meta, that is Facebook, and we had Amazon. Meta lost 20% in trade a few days ago after the result. And basically, we are staring at weak earnings quarter for the American markets. And also, we are hearing about layoffs, recession being real. People are losing jobs. The condition is not very good globally. Another big event that happened this week was in UK. So after the previous Prime Minister quit, Rishi Sunak, who is an Prime Minister of Indian origin, was elected in UK for the first time and had created history. So I think that was a big cheer for India, though there's nothing in particular for the markets, but it was a moment of pride for Indians. Fun fact, he's the son-in-law of Narayan Murthy. And now coming back to the Indian markets, another, I would say, not a very good news for the Indian market is that Byju's is there are rumors that they're going to be laying off a huge number of people. So I think the unicorn era or the startup era is has hit a very rough patch, I feel. And the silver lining is that the festival season has proved to be amazing. On Dhanteras, 19,500 crore worth of gold was bought on a single day. It is a huge number, very huge. And also the festive demand has been amazing. 4 lakh cars were sold in between Navratri and Diwali. I think these numbers suggest that the consumption theme has been very strong. The commentary that we have been giving about the festival demand has been amazing. And so now post the festivals, we might see a slight slowdown in consumption, but the results will be very good. For the rest of the sectoral updates, I'll hand over to Nirav, sir. Thank you.
Yeah, thank you, Jash. So I think we've had in the global markets, we've seen certain developments. We've seen the Dow Jones incidentally continue to register gains, while Nasdaq has been quite weak at the simultaneously. We've seen both these indexes move in divergent directions. They're moving in opposite directions. While the Dow is showing confidence, we are seeing the Nasdaq come under a lot of pressure. There is skepticism whether this slowdown in the IT sector might spread or might have a contagion effect on the rest of the other sectors.
So I think the divergence has to meet at some point.
Yes.
So we have to wait and watch for that.
So we've seen companies like Philips, which has cut around 4,000 jobs. They've decided to cut around 4,000 jobs or 5% of its workforce. As we talk, we've seen Electrolux, which is the white goods major. They've also cut around 4,000 jobs. after having incurred huge losses. So the global picture doesn't look very encouraging. At the same time, as far as the US markets are concerned, we've seen the dollar index is at 110. The 10-year benchmark bond yield has cooled off from 4.3% to 3.9%. And in the US, we've seen some encouraging data. The GDP growth in the third quarter was approximately 2.6%. So this has kind of given a cool-off effect to the rest of the factors which we just mentioned. At the same time, now the factors to look forward in the US markets will be the US Federal Reserve meet on 1st and 2nd of November. On 8th of November, we have the midterm elections in the US, which will also have a determining factor on the markets worldwide. Incidentally, in the case of India, we have an RBI meet, which is to brief the government on the inflationary situation just one day after the US Federal Reserve's meet. So that is also an important factor to look out for. These are some of the factors which are going to influence. But I think coming back to our sectoral analysis, which is of great importance to all our viewers. First of all, we start off with the auto sector. And I think today the star of today's market, of course, has been Maruti. We've seen some exceptionally good numbers, the highest volumes registered in any quarter by the company. The company has made a very strong comeback. The important factor is that margins have also seen an improvement. The chip shortage has abated largely. The pending bookings are at around 4,12,000 for the company. So I think everything possibly that can possibly go right has gone right for the company. More importantly, as also pointed out by Jash, that dealers have reported sales of approximately 1,000 crore per day continuously for 32 days. So we've seen sales of approximately 32,000 crores which have been reported in the 32-day period from Navratri to Diwali. This translates into approximate sales of around about 4 lakh vehicles which have been sold. So I think this all augurs and paints a very strong picture as far as Maruti is concerned, or Tata Motors is concerned, Mahindra and Mahindra is concerned. So we'll come 1st of November, we'll be having the auto sales numbers. They'll give us a better idea, and that will coincide also with the numbers being announced by the other auto majors. So I think
it's going to be a very eventful week next week as well. It's going to be very interesting.
Next week is going to be very eventful week because we'll be having the auto sales numbers. We'll be having the GST numbers, and this time the GST numbers, GST collection is expected to cross approximately 2 lakh crores. So that is also likely to have a very positive impact on the market. After this, we come to the banking sector. I think the banking sector, we've seen some, it's been a major propellant of the market. It's really pushed the market upwards. We've seen stellar numbers coming in from IndusInd Bank. We've seen strong numbers coming in from Axis, Kotak Mahindra Bank, ICICI Bank. And in a way, I think the biggest winner of this week was Axis Bank. I think the stock was up around 100 rupees in trade during this week. So I think we've seen a very good leg up in the banks. Apart from the private
sector, I think we should keep booking profits where we have seen gains.
Yes. And but I think in PSU banks, the story has just begun. The valuations were very dirt cheap. We've seen PSU banks trade at 0.4, 0.5 times book. So I think they're making a comeback. We've seen comments from government officials, from senior government officials, saying that this time around public sector banks are likely to report a profit of 1 lakh crores in FY23 as compared to a profit of 60,000 crores in FY22. Now this has really given a big push or a leg up to the public sector banks too. So I think the private sector banks as well as the public sector banks were in a kind of a comeback mode. We've seen smaller banks like Federal Bank or City Union Bank or Karur Vysya Bank. All these banks are making a strong comeback. At the same time, those banks which are down in the dumps like South Indian Bank, etc., have also gained in terms of valuations. Now the important thing to watch out for in the banking will be that how the deposit mobilization happens, because in order to chase the loan growth, the deposits have to grow at a very fast pace. So ICICI Bank, HDFC Bank, HDFC Bank has explicitly stated that they have managed to raise deposits handsomely in a very, very challenging environment. So these are the banks which are going to get a leg up. They'll get a first advantage in terms of the business which they're able to get from this environment.
So I think what you mean to say, we should be very watchful of the smaller banks who might have a bigger challenge on raising deposits.
They would have a challenge as far as raising deposits is concerned, and they would be able to raise deposits, but that would be at a higher cost, which is going to impact their net interest margins and their net interest income finally. So the gains might not come back to the profitability levels.
So the NIM might be subdued for the smaller banks.
So it's going to be the larger banks, it's going to be the more organized professional banks which are going to get a major share of the pie in this particular case. Third, we come to the cement sector. As pointed out by us, I think most of the cement companies have declared their numbers, but they have clearly indicated that they expect the demand to revive from November onwards. They expect the input costs to ease off from Q4 onwards. So there's a lag effect everywhere, and that lag effect will come with a gap. So one needs to be a little bit wary. The valuations are holding on at this point of time as far as the cement sector stocks are concerned. Next is FMCG. I think we saw a meaningful correction in the FMCG sector in this week. The reason being that most of the FMCG sector companies, they have given a view that the growth going forward is going to be value led, and it is on account of the inflationary environment, and volumes are on a declining path, and volumes have receded on account of the muted rural demand. The muted rural demand is likely to pick up with a pickup in the agricultural activity, but I think how it plays out ultimately is something which we need to wait and watch. So we've seen stocks like HUL, we've seen Britannia, Nestle, all these stocks have corrected in the market. One important exciting development which happened during the week was Dabur's acquisition of Badshah Masala. So I think it's an event which has been given a thumbs up by the markets. In the case of Century Textiles, I think we've seen the numbers. Century Textiles numbers were influenced by the strong performance of the paper packaging board division as well as the realty division. As far as the realty sector is concerned, we've seen some positive commentary coming in from various players like DLF. We've seen positive commentary coming in from the likes of Oberoi Realty, Century Textiles. All these companies have come out with very good commentary. So I think real estate stocks are also beginning to look up. They've reported good bookings. So I think the outlook over there also looks quite encouraging. Finally, I think we come to our couple of themes. Defense. I think defense continues to look good, and the railway segment stocks. I think a lot of experts have opined that railway stocks look quite compelling in terms of valuation and in terms of prospects from the current levels. So we've seen today some good movement from stocks like Railtel or RITES or even for that matter IRCTC, Railtel especially. So I think Mishra Dhatu Nigam is more focused towards the defense side. But railway focused stocks especially are likely to do particularly well going forward along with defense. So I think that kind of sums up our event for today. Kindly do write to us with your feedback, and we'll revert back to you next week with another edition of LM's Weekly.
And please don't forget to subscribe our channel on YouTube. Thank you.
Thank you.